Good afternoon traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar and pound yen. So last week, if you remember rightly, I said that the DXY will fall towards 94, which it has done, you can clearly see that. I also said that Aussie dollar, my words were exactly, if you're buying a dollar now, you're on the wrong side of the trade. You are buying a dollar any pair pretty much, you're on the wrong side of the trade, and we're going to go for each one of the dollar pairs as well with that to explain to you why in that situation. But I did say that last week, if you're buying the dollar, you're on the wrong side of the trade at the moment. I also said pound yen will head towards 144 if it pulls back, and with the dollar getting weaker, 144 is a very likely level on pound yen. So we'll go through each individual trade pair at the moment and go from there. So the dollar index to start with. Like I said, 94.5 was my key area, although I had a zone between 94.5 and 93, as you know, previously all the time on the weekly chart, and here we are now, we're entering this zone. So what I'm looking for now here is, I'm now looking for bullish price structure to form on the daily chart, which will then correspond to some tests and low tests around this area here. So at the moment, I'm not bullish the dollar, I want to wait and see what happens. Because if we close below 93, that is the sign to say free fall down to at least, I would say, at least 88, if not 84. So I want to tap these lines in now just in case. Because I'm still a dollar bull, I am at the moment. But I'm a wait and see dollar bull because I want to see the price action to happen. At the moment, a lot of traders are going, yeah, the dollar's going to collapse, dollar's going to collapse. It's all going to go to pop. What people don't understand is that you're still in this bullish zone here. You could say this is a range between 100 and 93, and this bit here is a fake out. You can happily say it, no problem at all at the moment, because if we get a test of 93 again, then that was a fake out at 100, and we're still in this range where it's not bullish or bearish long term like it was back in 2014, 2015. So at the moment, like I said, it's a wait and see. So 88, if we do close below 93, let's say we close below, well, it's never closed below 93 for a couple of years. So if we close below, let's say 92.5, and we're still seeing the bearish structure and everything else carrying on, the bearish trend carrying on, then yes, I'll probably may turn the dollar bear then for long term. But for the moment, I see value at 93 at the moment, and I think going long term at 93, once you see some bullish price action on the daily chart, that will give you some good trades to the dollar bull market again. It would. So for example, Aussie dollar short from 80 would be created around there roughly. The euro dollar at about 117, 118 off the top of my head on the weekly chart. That would look quite nice as well. You may even get pound dollar head up to 1.4. That would be a great short there as well. So this does coincide what's happening here at the moment. So while the dollar starts correcting itself, other pairs will still be powering up. So we'll go for that bit by bit as well. Like I said, on the daily chart though, at the moment, we're still heading down. We are at a key level of 94.1 on the daily, so we might get a rebound here back up to 95 or even back up the daily 50. It doesn't mean we're in a bull market yet, because we need to see some proper bullish price structure here. So you want to see double bottoms, triple bottoms. Look around here, look, inverse head and shoulder pattern, lots of multiple tests of 94 before it starts heading back up again. That's what you're looking for. So long trades off 94 and taking some short and taking some profit off would be quite an ideal situation. So back to Aussie dollar now. So I wanted to pull back from there to this circle here. Now that never happened. Like I said last week, it was the strongest close ever for 2 years. Here's the close here, and I said, you know, going short now is crazy. Buying the dollar is crazy right now, and that just shows you here with another bullish week here as well. I don't class that as being a high test. It never really, it just kind of just kissed the 200 EMA at the moment, nothing at all. It hasn't even kissed the 80 level, and if you look on the daily chart, that is not bullish price action whatsoever. You could say, oh, it's a reversal formation. I know some people would say that's a reversal candle, and sometimes I'd say it looked quite nice, but if you pop down to the 4-hour chart, for example, to me there's a range there. It's just range at the moment, and if I just draw like that there's your range for the moment on the 4-hour chart. That is not bullish price action, a bearish price action whatsoever. That's just taking a breather. That can go both ways, guys. So for me personally, I'm not interested in this trade whatsoever, take it short or long at the moment. I want to see something better than that. So that's just giving you an example of what's happening there. So what I'm going to do is now, guys, do something I don't normally do actually, is show you other pairs. So I want to show you, for example, pound dollar. Okay, and what I see on pound dollar here is actually a break and retest of the 130 area. Just got to see how this is a Friday candle here, you see. So Fridays people normally just take profit just in case, but that's still a semi-bullish bullish structure there. That is, you still on the 4-hour chart most likely have a nice break and retest of the same area there as well on the 4-hour chart clearly. On the weekly chart, I haven't drew 1.4 in, but we'll just do that now. We will. So 1.4 is key for me on the weekly and the day and the monthly. For me, it's grinding up higher and higher. It's still standing above the weekly 50, which is quite key, because if you look beforehand, ever since it's been in this bear market, it has really kept it below there. Only popped up once to the upside. Other than that, even Brexit just crashed back down again. So the fact that it's stayed now 1, 2, 3, 4 weeks above the above this area. If, however, this was a fake out on the daily, we'll soon see. So, for example, if I'm bullish at the moment here, but if, for example, this does pull back down, then and breaks the daily 50, then yes, then make the inverse head and shoulder pattern. That would obviously be bearish in my view. But with the dollar needing to create some structure, some bullish structure, I do believe this can creep up higher. It could easily creep up to the highs of, say, this area here, 1335. That wouldn't be too crazy to say, if it makes sense. And obviously once it gets up to there, the dollar would have most likely created its bullish price action on the DXY, where this would then head down quite nicely as well. You got then the Kiwi dollar as well. So guys, just going to go through these a little bit quicker than I am. Now, I was already short, as you know. I like the candle here. I did first initially target the 722L for 1.7%, but because the weekly then did actually create an inside bar, which was quite nice, and the daily also had, so the intraday had started breaking down. I was quite happy to take it, but no, it decided to go the other way, no problem at all. So if you look now again with the highs again, here we are, and I do feel that maybe this could mess around a bit, or we could at least head back up to, say, around about 77 again. And if you look at the weekly chart there, you can see what happened this week as well. So that's quite a bullish engulfing candle there. And like I said, we'll just tap in 77 for you as well. So this also coincides with the dollar getting weaker, and other currencies just taking its place with higher yields. So Kiwi would make it higher yields. Aussie is a nice higher yield again, it is. And so they're the things I'll be looking for in all fairness. And yeah, that's what I'll be looking for in all fairness at the moment. And you can see 75 I had there as a key level, but we move up to 77 now. That's 77, 76, 77, you get the idea. So yes, that's what I'm looking for there. So pound yen now. So on pound yen, I said to people, with the dollar getting weaker, the yen normally powers up quite nicely, and 144 will be a beautiful target. I actually had an entry one of these days here. It never pulled back, unfortunately, but to take it short, that was. But obviously it did head down to 144, which I'm not surprised at. So what I'm looking for now this week on this pair, I'm looking for some bullish price action, which would be on the intraday, an inverse head and shoulder pattern, double bottom on the intradays of like 1 hour, 4 hour charts. And obviously that would produce some low tests, inside bars, and a bit of deceleration around here. So deceleration on the daily would actually equal patterns on intraday. So it could be a triangle of some sort, and a breakout to the upside of the triangle. But I do feel this is a very, very good area to actually buy at. Okay. On the weekly, what does it look like at the moment? Well, at the moment we've got this bullish engulfing bearish engulfing candle to the downside, and what I'm looking for now, you see how this low test was here as such, and this on the weekly chart, I'm hoping something that happens here, because now it's actually at a very, very key level there. for me it's much better, it's on the other side. So before I didn't want to take this long here because we just rejected the weekly 50 EMA, and now we're at the other side, same price level 144, but the weekly 50 EMA now is below us, which is quite nice. It could act as support and resistance quite easily. We've got the triangle as well, the weekly triangle on our plus side as well there. And also, if you pop down to the daily now, you're going to have this the actual daily 50 EMA. You may find we pop down and pump back up again. You never know, which would be very, very nice. And I'll take it like that as well. So that's what I'm looking for really. So if we got an entry around about here, and I can get in at 100 pips, if I could get 100 pips out of it, 110. Anything like that, and I'm going to target the 154, 155. We're looking at that kind of percentage there, and that's nice to have for a monthly. 8% a month is 100% a year almost, guys. So if you want to double your account nice and safely, this is how you kind of do it. Okay, well that's it for now, guys. Like I said, this week recap. This week I'm looking for bullish price action on pound yen. That'd be so on the intraday. So it actually happens there. Aussie dollar I'm not particularly too bothered with at the moment, and I think most dollar pairs are going to be dollar bearish this week, so just look for the selling points against the dollar. Okay guys, take care and I'll see you soon.